Hello and welcome to the Head and Tail video. This is Joseph Rai. So when companies launch an IPO, it's often seen as a big milestone in their journey. It's a sign that the business has matured and is ready for the public markets. But for venture capital backed startups, an IPO means something else as well. It's one of the first real opportunities for early investors to start taking money off the table. Of course, they can't sell everything on day one. SEBI rules require pre-IPO investors to stay locked in for 6 months after listing. Only after that period ends can they begin selling shares through block and bulk deals. Over the last year and a half, India has seen a fresh wave of startup listings. Companies like MobiKwik, Ather Energy, Grow, Pine Labs, Lenskart, Urban Company, PhysicsWallah, Bluestone, and Meesho have all hit the public markets. So we decided to look at what happened after the listing bell rang. We tracked 17 new age companies that got listed between late 2024 and the end of 2025. And the first thing that stood out was their stock market performance. Only 6 of those 17 companies are currently trading above their listing price. Ather Energy has been the biggest winner, while Lenskart and Grow have also delivered healthy gains. But the majority of the cohort, including companies like MobiKwik, Pine Labs, PhysicsWallah, and Urban Company, is trading below their listing price. Then we looked at what investors did once the lock-in period ended. About half of these venture-backed companies have already seen investor exits through block or bulk deals. One of the standout stories has been SoftBank's investment in Lenskart. The latest stake sale has taken the Japanese investors' total cash realization from the company to more than $500 million, while it still remains a significant shareholder. Another interesting story is that of Abu Dhabi Investment Authority. The sovereign investor had taken a hit on MobiKwik after exiting its stake in the fintech company, but it has already started making some of that back by partially cashing out of its investment in Lenskart. It's a good example of how successful startup investments can offset losses elsewhere in a venture portfolio. AlphaWave has also partially monetized its Lenskart investment. Meanwhile, Peak 15 has fully exited MobiKwik, while it paired its stake in Grow, one of the venture capital firm's best performers. Another notable exit came from the National Investment and Infrastructure Fund, India's quasi-sovereign wealth fund, and Tiger Global from Ather Energy. And more recently, Fidelity has begun selling shares in Meesho after the lock-in period ended. What's also interesting is that these exits haven't always happened below the listing price. Investors in companies like Lenskart, Grow, and Ather Energy have been able to monetize their holdings at a premium to the listing price. It's also worth noting that several of these stocks came under pressure once the mandatory 6-month lock-in period ended and early investors got the opportunity to sell. Interestingly, all the new age companies that have listed in 2026 are still trading above their listing price. But the real test for that latest batch will come when their own lock-in periods begin to expire. In many ways, this is the first report card on India's latest startup IPO class. Not just on how these companies' shares have performed after going public, but also on how the investors behind them are finally beginning to turn years of paper gains into real returns. For more details on a data-driven story, please head on to the Head and Tail website.